Welcome back. You're watching SA Today. Well, we're getting more reaction to the greylisting of South Africa. As you know, the Financial Action Task Force has placed South Africa on its grey list, meaning the country will be under increased monitoring regarding actions against money laundering, terrorist financing and proliferation financing. For more reaction on this, I'm now joined by the Managing Director of the Banking Association of South Africa, Bongiwe Kunene. Ma'am, thank you so much for your time this afternoon. Talk to us about the impact this will have on banks and other financial institutions.
So the first impact is just on the climate for doing business with South Africa. It's not limited to banks, but South Africa, when it comes to finance, we've always had a great reputation as a place where one can do business and one can put investments into. So obviously with extra monitoring that comes with greylisting, there is that impact that it starts distracting, taking away from the good name of South Africa. What it means for clients of the banks, it really doesn't change many things because cross-border payments will still go on. There will be enhanced look on transactions that come from South Africa, but those transactions will happen unhindered, given the fact that the greylisting was expected. And in the financial markets, we also expect that it has been factored in.
I mean, you talk about the fact that, you know, this was expected. And of course, just recently, the finance minister in his delivery of his budget speech also hinting to that fact. And of course, it must be some form of positive news to know that at least the Financial Action Task Force says that South Africa is well on its way to close some of those gaps, those key gaps that it's seen in terms of, you know, the deficiencies in its financial monitoring and also just its strategy around how it handles that. As the Banking Association then, you know, in terms of some of the plans that you probably also started having in place, just talk to us about what you had done, you know, from a proactive perspective in light of, you know, understanding that this was coming. I mean, we kind of started knowing about it around 2021, and it became clear that South Africa was not going to meet its deadlines by the end of last year.
Yeah. So starting in 2021, banks have focused on actions that enhances the banking infrastructure and the banking systems. Start with the reporting of suspicious transactions. We started collecting data from all our members and submitting that collectively to the Financial Intelligence Center. And we also started analyzing what are these suspicious transactions about? Can we see any trend? So our reporting has improved significantly from 2021 to where we are now. By the end of last year, in just 1 year, 2022, we had reported and giving statistics and analysis to 260,000 such transactions. Then there were questions on beneficial ownership that we had to answer to. We worked with the whole financial ecosystem and in tracking who are the owners of assets that go, that banks are financing. We have answered that to a large extent. And the questions that remain, if there are any, are not in the report that has come out today. Because in terms of actions that are outstanding from banks, the report has been very clear that on the banking side, much has been done. Notwithstanding that, we see this as an action about South Africa. So banks will do anything and everything to enhance the integrity of the financial system. And we'll be working with our authorities, National Treasury, the Reserve Bank, SARS, and others to make sure that our integrity as a banking system is even better than what it was before.
There are, of course, concerns, the impact that this will have on trade, not only with other countries in the continent, but globally. Any concerns from your side in terms of the impact on trade with South African companies?
Immediately, there will be lags. The impacts will differ and there will be lags. So immediately, the trading that we can speak to is about how banks finance themselves. The expectation is that that may be more difficult in terms of the rates that the banks get whenever they pay for the way they finance themselves. Then that will have an impact on the real economy in terms of who we trade with. We trade with the EU, with China, with the US, with the African continent as a whole. So it's a very wide-ranging impact on trade for South Africa.
Will there be any costs incurred by the consumers directly themselves? I would imagine with increased compliance, there would be some form of costs involved. Do you foresee any direct impact on consumers themselves?
Not immediately. Mm-hmm. The corrective actions that the banks undertook starting in 2021 were aimed to make sure that there isn't a burden on clients. However, if we are in a stage where the banks have to do more to prove the systemic integrity and the systemic banking system being in one way stronger than what it was before, that could ultimately have costs for the consumers. But immediately, no.
All right, ma'am, thank you so much for your time this afternoon. Really do appreciate it. Bongiwe Kunene, she is from the Banking Association of South Africa. Of course, more reaction to the grey listing of South Africa.